A and B are two partners in the partnership firm. They want to admit a new partner named C into the partnership firm. This is known as admission of a new partner. Hi. Hey. Welcome. For coming into partnership, you will have to bring in cash as your contribution for what? Capital and goodwill. Partner C brings in cash as his contribution for capital and goodwill on the day of admission into the partnership firm. What is goodwill and why is it required for a new partner on day of admission to contribute for goodwill? What is goodwill? What is goodwill? Past reputation of the firm. High amounts of profits expected in future. Compensate the old partners, for what? For sacrifice of share in future profits. Efforts made in past to build the reputation of the firm, the benefits of which will be received in the future. We will now learn on how to make adjustment of goodwill in the books. Let's look at the first scenario. The first scenario depends on the following factors. Number 1, if the new partner brings in cash for share of his goodwill. This is known as purchased goodwill or premium method. Number 2, if the goodwill account is merely revalued in the books. This is known as non-purchased goodwill or revaluation method. Scenario number 2, it is to be seen whether the goodwill account already appears in the books or not. Scenario number 3, all the partners decide whether to maintain the goodwill account in the books or not. Hey viewers, thanks for watching. I hope you liked the tutorial and gained knowledge. Please like, subscribe, and share the video. Hey, hit that notification bell icon to get updates whenever a new tutorial is released. Take care. See you soon in the next tutorial.